Welcome to Inside the Vault, Enterprise Bank's podcast series where we talk about items of interest to the small business community. With me today is one of our valued partners here at Enterprise and a valued partner for a number of local lending institutions, Regional Development Funding Corporation. With me today, I have Rebecca McBlain, who's the Executive Director of Regional Development Funding. And for reference purposes going forward, we'll just refer to you all as RDFC, part of the alphabet soup of economic development organizations. Also with me today is Nathan Nyland. Nate is the Deputy Director for RDFC. Welcome, both of you.
Thank you.
Thanks, Dave.
Good to be here. Thank you.
Excellent. So what I wanted to do today is find out for our listeners and viewers to find out a little bit more about who Regional Development Funding RDFC is, what some of the programs are that you have to offer, and we're also going to look at some examples of the types of projects you finance for small business owners. But probably the best place to start is the beginning. So can one of you give our viewers and listeners kind of a history of who RDFC is and where it came from?
Absolutely. Happy to do that, unless you want to, Nathan.
Go ahead.
I'll hop in with the history. So actually, we were established back in 1978, and we were a joint partnership between the city of Pittsburgh and Allegheny County. We basically served as the economic development arm for those two governmental entities. Now, we've changed quite a bit since then. We are no longer government affiliated. We're an independent organization. But our original board members were the county commissioners, and our original board chair was a rather famous mayor of Pittsburgh, Richard Caligari.
Oh, I never knew that.
Yeah, isn't that neat? Isn't that neat? So it was established. RDFC was at that point was called Pittsburgh Countywide, but it was established to obtain a sizable grant from the EDA. That's the Economic Development Administration subset of Department of Commerce. They used those funds to develop Station Square in Pittsburgh and to develop Hares Island, which is now known as Washington's Landing. Subsequent to that, those monies were then paid back and funneled into a revolving loan fund that we still operate today.
Okay. So you and Nate personally, pretty well tenured with the organization right now, right? So you want to talk about your respective backgrounds?
Oh, sure. Yeah, we're a couple of old bankers, right? I'll own the old. So I've always focused on SBA lending, government lending in my career. Always enjoyed it. Just really appreciated the fact that you could get deals done for customers that would not traditionally qualify for conventional loans. So I spent a few years at several banks, 3 different banks, before I came to RDFC 17 years ago.
Is that how long you've been the executive director?
Yeah.
Wow.
Yeah. Time flies.
Wow. Yeah, I was just saying, I just celebrated my 20-year anniversary at the bank, and Becky, you and I knew each other when I was still at my former job at the SBA, and you were in the banking.
I was in banking.
Now I'm the banker, and you're in the economic development.
Exactly. Exactly.
What about you, Nate? What's your background?
Well, my tenure is not quite as long as Becky's is.
You're still as old as I am, right?
Yeah. Well, I think you have me by a couple of years. But, again, banking industry for a few years prior to RDFC. Specializing in some SBA stuff, not quite as much as Becky was, but, did concentrate in commercial lending, credit background, and then, stepped over to the RDFC, government lending and EDA lending.
15 years
side.
ago,
So,
right?
Yep.
Wasn't it 15
years?
Yeah.
Yeah.
Okay.
Yeah. So we've been kicking it for a while here together. Yeah.
Quite a tenure, yes.
Yeah. So it's a relatively small shop. Who else do you have on your staff?
We also have Deborah Betts, who is our operations manager, and she does all things other than originating loans, although she does help with some of the processing. We have Faye Palmer, who has been with us, oh my goodness, since
over 20 years.
Over
probably.
20 years,
Yep.
well over 20 years. And we have a part-time bookkeeper who comes in as well. Actually, since you asked, we have some open spots. So we are looking to hire some folks probably from the banking industry, need a credit person, another credit person, and probably a salesperson down the road too. So
what are your respective roles in the organization as the director and deputy director?
Well, I think we wear, being a smaller organization, we wear many hats within within our operation. So I mean, really, we kind of tackle all the duties myself.
team.
Yeah, as a
Yeah,
team, and
as
we
a
kind of
team.
pride ourselves on that and getting things done. But really on a customer basis, we'll do the credit underwriting, we do servicing ourselves. We'll tackle the actual processing with SBA and our loan programs, and just going out and getting business too. So.
Yeah. So you mentioned obviously the organization started with a local focus and local monies through the EDA, which have since revolved, and you still have that program.
We
and
do.
We'll talk about that.
Yeah.
But your flagship program is the SBA 504 program.
Correct.
So for those viewers and listeners that never heard of or don't know what a 504 loan is, can you talk about first of all, how the program works in terms of RDFC's relationship with the banking community and SBA, and then also just some of the general parameters of the program?
Sure. Yeah, absolutely. So, you're right. We started out as a very, small focused organization just in the Allegheny County. But since then, in 1982, we were certified by the SBA to be what's referred to as a certified development company, which authorizes us to basically do everything from soup to nuts with the SBA 504 program. So we are basically the face of the SBA to the borrower. That was in 1982. We've expanded to service all of Pennsylvania, all of West Virginia with the SBA 504 program. And the meat of that is that it's an economic development program that finances owner-occupied commercial real estate and what I refer to as substantial machinery and equipment. So something that has a 10-year useful life.
So basically fixed asset finance.
Fixed asset, yeah.
Okay.
Yep, exactly. And the neat thing about what we do is that we partner with banks and other financial institutions or public funds. The bank will come in a first lien position, which banks love, right? It helps mitigate their risk. They'll do 50% of a project. We'll come in behind the bank in a subordinate position and do 40%. The benefits to the borrower, 10% down as opposed to
20-25% in a
correct.
Conventional
Yeah,
deal.
yeah. And our rates are fixed for the term of the loan. So, we all know that, interest rates have certainly changed over the last year and a half. But the massive benefit with 504 is, in October, we had our most recent rate release, 25 years, and it was fixed for 7.2%. Which is still pretty attractive right now, given the fact that residential
prime rates at 8.5.
Yeah.
So
yeah, and residential mortgages are over 8%.
Right.
So you can't beat the deal, really. In this environment, you can't beat it.
Yeah, and I want to make sure our viewers and listeners understand. When you talk about SBA financing, everybody really thinks of what's called the 7A program,
Yes.
and that's the program where the banks actually deliver the SBA guarantee, which is basically an insurance policy for the bank. And that's done, as a bank loan with an SBA enhancement behind the scenes. This is different.
It is
504 is different. And the big disconnect I see is business owners think, well, if I only need SBA if I'm a weak business from a credit standpoint. 504 is totally different. It's an economic development focused program. So you talk about strength of the businesses that you're able to finance at good rates under that program?
Yeah, absolutely. Yeah, we are economic development. We are not credit enhancement.
Right.
We've never seen it as such. And in that regard, we're lending to most cases established companies, that understand that even though they have excess cash and they can put more money down, they recognize that it makes good sense to hold on to that for their own working capital. Where are you going to get working capital fixed for 7.2% for 25 years? You can't. And so, really, we lend from, mom and pop organizations up to what I consider to be middle market companies. The maximum size that there are size standards under SBA. It has to be considered a small business. That means that the borrower and its affiliates can't exceed $15 million in tangible net worth.
It's a pretty big company.
It is. It is. Or net profit over the last 2 years of $5 million or more. So, it's a good-sized company.
And I think over the years that we've been there's maybe been a handful that have probably exceeded those standards.
Right.
And to be honest, with the new rule changes with the affiliate standards, it's actually kind of made it harder to reach that threshold. So I think it's going to open it up to a little more borrowers that were originally shut out with that 15 million cap.
Yeah.
But, it's just, I brought up what I brought up about 7A versus 504 because, you still 7A is a much larger program
Sure.
on a national basis because it's delivered by hundreds of thousands of different banks in the
Right.
U.S., whereas this 504 program, how many CDCs are there nationwide?
There's about 200.
And when I say CDCs, folks, I'm certified development companies.
Companies.
That's basically the licensing that RDFC and similar organizations have from SBA to act as their agent for the 504.
Correct. Little over 200.
How about in Pennsylvania?
Ooh, good question. Yeah, I would say maybe about 12 right now. I
a
know that
dozen.
in our region, and that's 5 states and DC, I think we have 15. So, I think we have less than 12 in PA right now. We are the oldest in Western PA, and really, honestly, about the most prolific lender in Western PA as well.
And there are some that aren't quite as active as we are.
Correct.
Also,
I know a lot of these organizations are like county or regional-based economic development groups
Right.
that offer
CDFIs,
504
correct.
among
Yeah.
a whole myriad of local programs. You guys, this is your flagship.
This is our flagship.
right. You'll find a lot of
absolutely.
them focus on other programs that they house, whereas we kind of focus on the 504.
Right. So how does the process, if I'm a small business owner or a lender, because you get, basically you get referrals or leads from both businesses themselves and lenders.
bankers, yeah.
How do you work with the private sector bank and the SBA? How's the process work?
Yeah, good question. So, obviously, if there's a borrower out here listening today and they think that they might qualify, by all means, give us a call.
Right.
We're always happy to field questions from borrowers and, we'll walk them through the process. But like you said, most of our deals oftentimes do come from banks and other referral sources. We really like to get into the deal early on to help them with the loan structure. It's
It's a government program.
It's a government program.
It's got parameters.
Yeah, we've got quirks. We've got quirks. So it's always best if we work through those early on. I don't like to give borrowers slow nose, that you're not going to fit within the program. And candidly, while we'll work with any bank, some banks are just simply more prolific 504 lenders than others. And so, we are happy to do the hand holding, so we'll work with the bank, talk about the structure, help them get their portion of the loan approved while we work simultaneously. And do you want to talk more about that, Nathan? He's the processing whiz. He's the guy that oversees all of that.
Well, so our processing is to work hand in hand with the bank and the borrower, just to, one, achieve eligibility. There are some eligibility requirements under the SBA 504. So, we'll establish those, move forward in the process, take the underwriting, just make sure it fits the 504 structure. We kind of take the burden of the SBA application out of the hands of the bank.
Well, and I think that's an important point,
Yeah,
Nate.
yeah.
You do not have to be an SBA lender as
No.
a bank or even some non-banks to
Right.
do a 504 loan, because from that lender's perspective, it's a conventional loan.
It is.
Right.
It
So,
is.
yeah, you'll find, there are some banks that have a designated SBA department that they're a little more knowledgeable than some others. But that doesn't preclude you from the program. So
Right.
if you're a small community bank and you want to, entertain a 504, we can walk you through the process. We'll deal with the application with the SBA. We'll handle any questions during that process that they may have regarding the credit. And at the end of the day, we'll obtain that approval for, on behalf of the borrower and the bank.
Okay.
So I think that really does help, promote the program and, benefits our knowledge with the program as well.
So can you also talk a little bit, because it is a little unique, about how the funding for
Yes.
these 504
Yes.
loans happens and how you end up as a business owner with a below market long-term rate?
Yeah. So how much time do you have?
It is a little complicated.
It is complicated. I'm going to.
So layman's terms.
Yeah, so definitely let's break this down, and it probably took me a good 6 months to understand it myself. So, we're funded by bonds. Sort of the catchphrase in the industry is that it allows, small businesses, Main Street, to access Wall Street
Bond
pricing.
markets,
Yeah, bond markets. Because honestly, I suppose, General Motors or another really large company could easily go out there and float a bond to fund their expansions. But who's going to do that as a small business owner? It's not going to happen. And so this allows them to do it, as you said. So the funding is a sort of an awkward process in the beginning when people try to wrap their heads around it. Let's say someone's buying a building, okay? And there's no construction or anything like that. It's just simply turnkey. We could, as I had mentioned before, we split that debt with the bank. we could go to closing on the very same day. The bank could close their loan. We could close ours. But because of the fact that this loan then needs to get filtered through the process at the SBA and sent off to our fiscal agent, who then takes that loan and includes it in all of the 504 loans that close in that particular month. And that's what makes up a bond issuance. And it's at that point that they take it out to the market and they figure out what investors are willing to accept as their return.
Who buys these bonds?
Mostly institutional investors.
Okay.
Yeah, so they could very well be
Pension funds, insurance companies.
Yep. It's most likely in our 403Bs and 401Ks, Yeah, absolutely. But because of the timing, what the bank will do is they'll do their permanent loan, but then they'll also do an interim loan that's basically bridge funding. And that allows a little bit of time for us to work through the SBA funding process.
Okay.
But it's really, all the borrower has to do is get to the closing table, and then we take care of the rest of that in the background.
And obviously, you, in addition to purchasing real estate or equipment, you can do ground up construction or renovations.
Yeah.
The way that process works, all the money has to be spent before the SBA guarantees the bond issue, right?
That's correct. That's correct. Yeah, I mean, and that can vary. I mean, sometimes we have construction projects that are only a few $1,000s.
Yeah.
Other times it's ground up. I mean, we've had some, Nathan, probably we're waiting in the wings for the construction to end, sometimes a year or more.
Yeah.
Yeah.
And to note, our SBA debenture approvals are good for 4 years. So it could kind of accommodate any period of time for even longer construction programs.
Sure.
Now, the one important thing I think for our viewers and listeners to note is because this is a bond-funded loan for, as you said, up to 40% of their fixed asset costs, those rates are actually determined based on the sale of those bonds each month. So there is some variability in the rates, but they're always below market.
They are always below market. That's correct. And yeah, I mean, we all know that rates have gone up across the board. Again, 7.2 and some odd change is still, pretty attractive compared to where a conventional commercial.
When I talk to small business owners that are, they're pursuing 504 loans or we've done them for, the rate's great, but their real like of the program is the working capital retention. Because they only have to, if they're an existing business, put 10% down. 10% down. And you get into, and we'll talk about project sizes here in a second, but you get into large projects, the difference between 10 and 20 or 25% on a conventional is significant.
Yeah.
So let's talk about that. So the other thought about SBA lending in general is it's
the myth.
The myth is it's for small loans.
Right.
This program can leverage into some pretty large projects. Can you talk about that?
Yeah, absolutely.
Well, I mean, the $5 million that handles a $12 million project. It can even accommodate more than that.
So the program limit's $5 million?
$5 million SBA wide.
SBA.
So,
and that's only maybe 40% of the project.
Well,
total.
Yeah, I mean, you could even have a $30 million purchase, and we could do $5 million of that piece.
Right.
Okay.
So, I mean, we're just capped at the $5 million, and it'll also depend if there's 7A. But I mean, as far as the project size, I mean, there's really no set point in how high that can go. It's just our piece would be, instead of 40%, maybe it's 20% of the $30 million price. But
so what's RDFC's experience? I mean, I know there's, no magic loan size, but where do most of these projects range in size?
That's a good question. Yeah.
I think our average size is probably like 750.
Between 750 and
$1
million.
So that's like $1 million, $5 project.
Right.
Total with the bank piece and the equity.
Correct.
And we've actually had a couple borrowers that have exceeded $5 million. So, the SBA does have some quirks in that if it's a green building or, some other, I guess it's just a green building that allows you to do separate projects. So you could do one project where it's $4 or $5 million. And then, we had another borrower construct another building, do green energy, save on that, and be able to do another $5 million.
Up to 16 and a half, in fact. Yeah, I have an example we're going to go over here in a couple
so
of minutes.
So I jumped the gun a little bit.
That's okay. He's excited about it. Yeah, but between, back to the, our sweet spot, it varies obviously across Pennsylvania and West Virginia, pricing, if you're going to buy a pretty large building in the city of Pittsburgh, it's probably going to be a significant price. If you're going to lend into a rural area, maybe in, I don't know, Elk County, obviously the loan sizes are going to be smaller. I think the thing to keep in mind with 504 is that, sometimes you can run into a project that's too small for 504 for it to make sense. And it's important to us, not just that we make a loan, but that we're giving good advice to our borrowers. So I really think that the smallest reasonable project size is about 300,000.
Okay.
So that would give the bank 150. We would do 120. Borrower would put down 30,000. If you get lower than that,
Well, you have another tool for lower size projects.
Yeah, we do. Should we talk about that now?
Well, let's not get off. A couple more things on 504.
Okay.
So, it is an economic development program.
Right.
So most economic development programs have a result
Yes.
that they're looking for.
Yes.
So usually that result, like for the state of Pennsylvania, for instance, which has the PETA program that's been around forever, it's got very favorable rates, but it has a very tight job creation requirement. SBA 504 also has a jobs requirement unless you qualify for any number of other policy goals the SBA has. Can you talk about that?
Absolutely.
Why? I think our biggest eligibility that we feel is probably rural eligibility. You'll find that in Western PA. A lot of these projects qualify for rural development. We could do job creation. That's another thing we track. Woman-owned, minority-owned businesses.
So if you fall into one of these other buckets, you don't necessarily have to create a certain number of jobs.
Correct.
Yeah.
It's as long as you meet one of those criteria, it qualifies for the SBA 504.
Yeah, we've had, at least personally in our bank, has had pretty good success qualifying projects that didn't necessarily meet the jobs test. Because let's be honest, a lot of, particularly in manufacturing and automation, the employee counts aren't what they used to be.
Right. Sure. Right.
But there's a lot of other initiatives out there.
There are.
We've done export.
Yes.
We've done, as you said, rural.
Yeah.
Women, minority, veteran-owned businesses.
Veteran-owned.
Yeah. So SBA actually, thankfully, increased the job requirement. So for every for every 90,000 borrowed from us, just the SBA, they have to create one job, unless, as you said.
I remember when it was 35,000.
I know, right? I know. I'm so grateful that they increased
been a while,
it.
Dave.
I know. Yeah, it was just increased from 75 just recently. But there are, as Nathan and Dave, both of you alluded to, there are 18 other community development, public policy goals that, we'll do our darndest to try to fit somebody into one of those.
There's labor surplus areas. There's generally something we can kind of find to meet a project's needs.
Right.
Yep.
Yep.
So, as I mentioned, smaller projects, the legacy program that Pittsburgh Countywide, now RDFC started, is still available. We can talk about that.
Yeah. That's called now the Small Business Growth Fund.
Okay.
And we can lend anywhere in Pennsylvania, West Virginia, or Ohio. Actually, we're stretching across the border into Ohio. Have yet to do one over there, but we will. And as you stated earlier, Dave, we tend to use that program. It's a smaller loan program. We have the cash ourselves, and so it's a little less of a process in getting loans approved. But not, it's still not cumbersome. But in any case, our maximum loan amount, we like to stick to about $250,000. So if we have a smaller project, if someone calls and says, hey, I'm buying a building, I'm spending $250,000 on the building, it probably makes far better sense to use this program than a 504.
Yeah. And you have a little wider eligibility, use of proceeds wise for this program, right?
We can do pretty much anything. We can provide working capital with this and some other things that 504 cannot. It was really the only thing to keep in mind is that we can't fund construction because of the fact that they were originally federal funds and it kicks in the Davis-Bacon Act. So subsequent to receiving that grant and developing this revolving loan fund over the past 40 years, we also received what I believe was probably the largest grant under CARES Act from the EDA in Pennsylvania. And that was about $7 million a few years ago. And that has been fully lent out.
For COVID relief.
For COVID relief, yeah. And we've been able to develop that, too, into another revolving loan fund. But that's specific to Allegheny County. Yeah. And, honestly, we're our ears are always to the ground. We're always looking for additional opportunities to start new funding programs. We don't have problems getting money on the street. We've got a really good network of folks who, work with us and, we're happy to lend the money out as soon as it's
Right.
available to us.
Well, I think kind of really show what you guys can do. I'd like to go through a couple of project
that'd be
examples with
great.
you. Now, for those of you that are watching this on YouTube, you'll be able to see some of this information as we discuss it. But those who are just listening in audio format, we'll try to walk you through it. So, Becky, you have several projects for us here as examples of what you guys have done. Can you walk us through some of these?
Sure. And I always like to choose projects that are a little different. So this one kind of piggybacks off what Nathan was saying earlier about green energy.
Yeah.
So we financed with a local bank. Two brothers wanted to buy their parents' truck sales and service company. And do you remember off the top of your head, were there 8 or 10 different properties that we financed? It was
I think there was around 8.
8.
Throughout PA.
Throughout PA. Yeah, it was a big project. And our piece of it was over $4 million. So as we have just talked about here a couple of minutes ago, typically the maximum borrowing under SBA is $5 million. So when they decided that they wanted to build a new building and consolidate 2 of their existing locations, and they came to us for help because they loved the program, they, in fact, the neat thing about that is the first deal that we did for them for the acquisition, they put no money in. We were able to do this completely with seller financing that came from their parents. So while they were hardworking guys and really knew the business, they didn't have a lot of cash.
Yeah.
And especially with a large project like that. So there's a lot of creativity that you can exercise if you think it's a good project. So when they wanted to consolidate these buildings, they came to us again. We had them engage a company to perform an energy audit. We showed that the new building would improve their energy consumption by more than 10%. And we were able to lend to them again with a new SBA loan over $3 million. So our total borrowing with them was about $7.5 million.
Just your piece because of the energy efficiency.
That's correct. Yeah.
And that's a public policy goal.
That is a public policy goal. Yeah, it absolutely is.
Neat.
Yeah. Here's another one, a machine shop acquisition.
Oh, so this is an equipment deal here.
This is an equipment deal, yeah. In fact, so this was a gentleman who wanted to buy a machine shop a number of years ago, and he had some cash to put in the deal. He put down about, the total purchase price was $5 million just for the equipment. There was no real estate involved in this. He was in a lease space. So he came up with about $200,000 in cash. He had a seller note for about $300,000. And then we partnered with the bank and provided some additional monies for them to finance closing costs and soft costs. They bought the assets of the company. They did very well. And then a couple of years later, they came to us and were in a position where they needed to increase their line of credit with the bank. The bank was a conservative bank and chose not to do that. So actually, Dave, this is a deal that we did with you. With Enterprise Bank, we refinanced that existing debt with another 504.
Pulled some equity out.
That was equity in the assets that they owned, and was able to give them some cash out. So here's a self-storage facility. I like to tell people about this only because a lot of folks don't realize that we can finance self-storage.
Yeah, because I'm thinking, where's the job creation in a self-storage facility?
Yeah. So Nathan will probably remember this was a rural development loan.
Okay.
Yeah, this was a rural development loan in Beaver County. Again, it was a partnership with Enterprise Bank. This was an existing customer. We were able to, they wanted to expand. The cracker plant had bought up so much land that there were not that many self-storage spaces around. A couple of them had to shut down. So we refinanced the existing mortgage and we gave them additional funds to buy the equipment and the construction. And because of the fact that they had a lot of land equity, they had no cash in the deal. So it worked out nicely for everybody. Yeah.
Well, this next one looks unique.
Yeah, this is a great story. This was in Fayette County, Pennsylvania. Once again, rural development. So this was an existing campground. We partnered with a local bank. We refinanced some of their existing loans and provided quite a bit of cash for them to build a restaurant and locker room and put in a water park. We partnered with a bank, and we also partnered with a local development agency too.
Well, I think that's an important point. You can combine this program with other economic development programs.
We can, and in this case, it was with FayPen down in Fayette County. They had some really low cost loan money that they were able to. It always helps the borrower, even though it makes it more complicated, especially when you're writing out the checks and you're paying your bills on a monthly basis. But if you can really, improve the capital stack with low interest loans like this,
particularly in this market right now.
Yeah.
I mean, I tell clients we're going to try to access as much economic development financing as we can, because used to be a lot of those programs were above bank rates. Now they're below bank rates.
Yes, they are. Yes, they are. Yeah, that was a neat story as well. Well, here's another. This was right after COVID. It was a screen printing company. We were able to refinance both a mortgage debt and 7 leases. I think, Nathan was still having PTSD over that. That was a lot to put together. It was a bit of a moving target, but because of the ability, to improve their cash flow by doing that, because, lease payments are typically kind of expensive. We were able to refinance them into a really nice low rate, and we gave them cash out. And frankly, I think this would have been a company that would not have survived.
I'm even trying to remember how much we saved them on monthly payments. It was something crazy.
Unbelievable.
It was like hundreds of thousands of dollars.
Yeah, so this refinancing component, which is relatively new for 504.
It is
of great value for companies that have a lot of equity tied up in their fixed assets but need working capital.
Exactly. Which leads me to the next project. Recently, the SBA said, okay, we have for a couple of years allowed you to use the program to refinance existing debt. Now we're going to let you refinance SBA 7A loans. Now, look, I have always been a massive proponent of all of the SBA programs. There's a great place for each of them, right? Never would ever say anything to malign the 7A program. It's an excellent financing vehicle. But here's the problem. A lot of these loans for real estate purchases, we all remember when rates were 4% a couple of years ago. And so a lot of the national 7A lenders made real estate loans that were adjusting quarterly based on prime plus 275. This was a company that was paying essentially 11% in an interest rate. We were able to refinance this. Sadly, the appraisal came in light. So we were able to step up with one of our other economic development programs and fill that gap on the appraisal value and make it work. And, it all worked out. And we were able to lock them in. Rates were still going up then, but I think we were able to lock them in around 5 or 6%, which was certainly an improvement over what they were paying. So, I think the moral of the story is that, not only is it a good program, but there are ways, if you can work with an experienced bank and have a lot of patience from the borrower to be creative on these projects and find ways not only save them money, but, get them in a good low rate too.
Yeah. And I can tell from this this group of examples here, this is pretty much an industry agnostic program. I mean, it can work across all different types of businesses.
Yes.
So how do small business owners or even lenders, how do they get in touch with RDFC?
Well, I would say go to our website, but it's being rebooted now. So
soon to be up and running.
It will soon to be up and running. I would say in December, check our website.
Okay.
And that's www.rdfc.net. And you can always just call our office. We spend a lot of time on the phone talking to prospects, not only banks, but borrowers. And that's 412-471-1030. You can talk to either Nathan or myself, and we're always happy to help.
Excellent. So for small business owners, I mean, it's one of the 504 has always been one of the best games in town from a financing structure, interest rate perspective. And now with the growth in your other program, you have a lot more capabilities there, particularly geographically. So RDFC, great partner of this bank. I know great partner of a lot of the local banks. Definitely, keep them in mind for fixed asset financing, in particular with 504, and even for other projects under your existing program. So final thoughts. What advice do you have for aspiring entrepreneurs that need financing?
Go ahead, Nate.
Words of wisdom.
Words of wisdom. Yeah.
I guess what I would say would be, anybody looking to finance some real estate or equipment, just give us a call. We could probably, work you through the process, or if it's something we can't help you out with, we have enough networking that we can kind of connect you with somewhere to get the deal done. And again, there's a lot of questions and nuances even to a lot of the programs. And I think, our expertise and experience in the industry, we can kind of help you out.
Well, I can't improve on that. Yeah.
Yeah. Again, I think the biggest thing is just reaching out with a phone call and
Sure.
just kind of going over any questions you might have.
Absolutely.
Excellent. Thank you very much for participating. Great
Thanks.
information for our small business community.
Thanks so much for letting us be here with you today.
Thanks, Dave.
Not a problem. Anytime. So, for those of you that might have any questions about this episode of Inside the Vault or have suggestions for future episodes, you can email us at insidethevault@enterprisebankpgh.com. And you can check us out on all the major podcast platforms in audio format and in video format on YouTube. Thank you very much for listening or watching.